Credit card companies are trying to play you for a big dummy. Never start your own business. Also, as long as this one thing keeps on happening, the stock market, cryptocurrency, precious metals, all of them will be going all the way up. Maybe not straight up, but like this. But honestly, none of that matters anyway. So if any of those topics interest you, you're going to watch this whole video until the end, all right? So keep it locked. It's Crystal with the Cash Compass. All right, welcome back. I am here to teach you all the things that you should have learned in school about money, but for whatever reason, they forgot to mention it. If you love all things personal finance, investing, and economics, you're gonna definitely want to subscribe and hit that button down below. Let's get into it. All right, let's start with these credit card companies because they are heavily fraudulent and I hate that for us. Please understand that if you are making minimum payments, you are choosing violence. And I don't want you to do that, all right? Let me tell you how these minimum payments work. Excuse me, I have to drink coffee because coffee is life. I also have to get comfortable because it's kind of hard sitting down here for such a long time. Let me show you how these minimum payments work, okay? The minimum payment is a very simple calculation. It is 1%, one solemn percent of your account balance plus fees and interest. So you might be making a payment of, let's say, $160. Of that $160, maybe only $75 is going towards your actual payment, and the other, I guess, $85 is fees, okay? They are tapping that ass. So let's say you have $10,000 on your credit card. You're literally only putting $100 a month towards that if you're paying the minimum payment. That's it, all right? That balance is going nowhere. Because once you put on the interest, you're paying all this money and you're never going to get out of debt. They know this. So you must make more than the minimum payment unless you want to be making payments for the next 12 years, okay? A lot of times the interest rate is obscene and it's in the double digits. I'm not trying to give you financial advice, but a lot of times you might have some equity in your house that you can kind of grab up, all right? Whether you get a home equity line of credit, that might have a little bit of a higher interest rate. But even if you do a home equity line of credit, or if you just refinance your whole house altogether, it will still be cheaper than the credit card debt. So if you are in credit card debt and you can, actually refinance, there's also refinancing fees. So you'd want to calculate it and make sure it makes sense. But in almost every situation, it would make sense, right? Because interest rates in the housing market right now are in the single digits, okay? Even if you are a risky buyer and you have to, or you're self-employed or something, you might have higher interest rates, but it'd be nothing compared to the obscene amount of interest you have on your credit cards. The average interest rate on a credit card is 17%. So if you can rearrange your finances, try to pay off this credit card debt using whatever equity you have in your house, because in the long run, you are going to be saving a lot of money. Who doesn't want to save money out here, huh? I'll wait. And while we're on the topic of credit cards, late payments. If you make a late payment, it will not go on your credit report until it is 30 days past due. I am not condoning or encouraging anybody to pay late because that's not good, right? You don't want to get into the habit of doing that, obviously. But at least you can rest assured that it's not going to be reported to the credit bureaus until it's 30 days late. Now, that doesn't mean you're not going to get a late fee. You're definitely going to get a late fee, all right? So definitely pay on time. But at least you pay the late fee and you're done with it, and you don't have to ever think about that ever again. Whereas if you pay after 30 days, it's going to be an ugly little mark on your credit report for at least 7 years. Businesses are overrated, okay? Don't start a business because you're going to be wasting your time, your money, your resources, and your patience, okay? Heavy on the patience. Because building business takes a lot of patience. I didn't earn $1 on this friggin' YouTube thing for 11 months. If that ain't patient, let me know what is. I'll wait. I've already spoken in great detail and actually have gone through examples of how you can do this, but you need to consider buying a business. If you want more information on buying a business, click this up here. I hope that's the right way. Yes. Click this up here. Buying a business is what you need to be doing these days because you take the guesswork out of everything. You'll be able to see all their profits and you can make a decision that actually makes sense. Maybe you can even buy a business in the industry that you want to start a business in. That'd be amazing because then you can actually leverage off of the previous owner's information. They'll teach you the tricks and trades of the industry and you could be a complete boss. So definitely click that video for more information. Now, as I mentioned, the stocks, any type of asset really, there's ups and downs. Nothing ever goes up or down in a straight line. So I don't want anybody saying, oh, well, cryptocurrency crashed the other day. Right. Nothing goes up in a straight line. Okay? So keep that in mind. The Federal Reserve and the banks, both of those entities have the ability to loan money into the market, okay? As long as the Federal Reserve is loaning money into the economy and just throwing free money into the economy, in my opinion, not financial advice, I have to do those disclaimers because I don't want anybody coming here getting mad at me, and everything is subject to change. But in my opinion, as long as they're doing that, we can see asset prices on the rise, okay? I know a lot of people are going back and forth about buying a house, and I'm gonna talk about that in a second. But I expect to see things going like this, just up and up and up and up, okay? Because that money is rushing into the economy. And like I've said, probably every other video I make, there is no money heaven. That money has to go somewhere, and it almost always goes into assets. So if you're buying a stock and if you bought it today at $100 and it dropped down to $30, that might suck, but that's a short-term thing. I really do think that as long as we keep on having money being flushed into this economy, that we're going to see things on the rise. That doesn't mean that we're not going to see corrections along the way. So I do think, things might drop 20%, 15% here and there, but it's only leaving room for it to ratchet even higher. Having a solid education on what the Federal Reserve is will really help you make better financial decisions and really help you from being afraid, because like I've mentioned, they're going to keep on with these easy monetary policies, okay? They're going to keep on buying up mortgage-backed securities, which is helping the housing market. They're going to keep on pushing money into the economy through bailouts, through PPP loans. All these things are extra money that companies and individuals did not have before, so they have more room to invest. They have more room to keep on buying back their own stocks, okay? These things all cause assets to rise, and I think we're going to keep on seeing that, all right? But keep an eye out on it, because the Federal Reserve might also try to trick people and say, listen, we're gonna tighten our policies. We're not gonna do this. We're not gonna do that. In my opinion, it's BS. It's all mind games and psychology, because they'll tell you they're gonna do something, and because they tell you that and they are an authoritative force, people are gonna act based off what they've said, even if they don't do anything. So you're gonna wanna always listen to what they're saying, which I can keep you updated. So definitely subscribe, and I'll keep you up to date on what the Federal Reserve is saying when it's important, because a lot of times they talk a lot of crap. But honestly, who cares about asset prices, okay? I don't. I kind of do. But the reason why it doesn't matter is because, especially with real estate in particular, but if you believe in something and you do think it has a positive outlook, a good business model, then all these things will come to equilibrium in the future. For example, right now with the housing market, a lot of people are like, I don't want to buy anything right now because it's so high, and I don't want it to crash, or I'm waiting for it to crash so I can buy. Why are you waiting? And I got to ask myself this too, because I'm going through it also, okay? Why are you waiting? Whether you're buying it as an investment or as just like a house for you to live in right now, there is a way for you to just check if it makes sense as a reasonable investment, okay? So when it comes to buying a house, if you buy the house right now, and you're like, maybe you're looking through realtor.com or you're looking through Zillow.com, look for rent first, okay? And in the same area that you are looking to buy, pretend that you're going to be looking for renting instead, and see what the rental rates are going for, okay? I would never suggest anybody to buy a house, whether it's for an investment property or even for a house to live in. I would never tell someone to buy a house without doing this first, okay? Because you will see what they're going for. And you can use that one bit of information to determine whether it's a buy or not. If you're buying a house and the rents around that area cannot pay off your mortgage, then I would not advise you do that. Because what happens when you get into a situation where maybe you need to get out of that house, right? But for whatever reason, maybe it's not a seller's market right now and you cannot really get out the house. At the very least, you can rent it out and figure out what you're gonna do. If the rents will not cover your mortgage, at the very minimum, you're going to be in a lot of trouble, because you're going to be paying maybe 2 mortgages. It's going to be problematic, okay? So definitely make sure that your rents can cover the mortgage. in that area. That way, if you do need to leave, you can rent it out, and it won't really matter what's happening to asset prices in the interim, because you know that it cash flows. And in this day and age, cash flow is much more important, in my opinion. I want to make sure there's money coming in every single month. It doesn't matter what the asset is worth. It's bringing in money, and that to me is worth a lot. So you could have bought a house this year, 2021, right? Next year, housing prices could go in half, but who cares? If you want to leave that house and the prices are still kind of ugly for you right now, and you don't want to resell it because you're going to sell it at a loss, then rent it out. And that's it. It don't matter. Same thing for stocks. If you're buying a stock and it has a dividend, and the dividend is, around the kind of return that you want on your investment, who cares what is going on in the short term, right? If the stock prices plunge, well, then you could buy some more stocks. As long as the dividends keep the same, then you might actually have a higher return. So don't look at the prices right now in the interim, unless you're focused on growth type of things. But if you're focused on cash flow, if that thing cash flows, it doesn't matter. All right, last one. Money goals don't work unless you do. I am so guilty of this. True story. I wanted to start a YouTube channel, I would say anywhere from like 6 to 8 years ago, okay? I started it only a couple years ago. I wanted to do this for the longest time, and I just sat on it as an idle dream. I would have never imagined that I would have done it and actually had, over 20,000 subscribers. And that's like a really big deal to me. But I actually took it by the horns in 2019 and decided I'm going to actually work towards it, okay? Because I wanted to get on YouTube. Of course, I want to make money, but I thought it was great to just get out here and get my information out to people. And that goal would have happened. I would have never even met you. We wouldn't be in here talking right now if I didn't actually take the steps towards doing that. Same thing when it comes to savings goals. I had savings goals for years and years and years, and every year at the end of the year, I'd be nowhere near the goal. Matter of fact, I'd probably be in a worse position, right? I was spending too much money. I got buck wild that year. I went on too many vacations, whatever. Like, I'm guilty of it. I don't care. But I wasn't being serious. I fell short of my budgeting. I wasn't looking at it all the time. So if you really want something, not even monetary, like it could just be a regular goal, like losing weight, getting a man, getting a lady. You have to actually work towards it. It's not going to be enough just saying you want it and sitting there. If you're not working towards your goal every single week, you're not going to get there. Maybe you will, right? By some sheer sliver of hope. But if you're actively working on it, every week you're checking your budget to make sure that you're saving. Every week you're writing down new YouTube ideas. Every week you're saving towards getting a new business or buying a new business. How could you fail? How could you lose? You can't, all right? So hopefully if you made it this far, then this message is definitely for you. I think you need to go ahead and after you finish watching this, go ahead and start working on them goals, all right? But if I missed anything, let me know, because I definitely want to hear from you. But that will do it. If you like this video, then please be sure to like this video and share it with your friends. And if you have anything else going on, you know what to do. Go ahead and binge watch me. And until next time, keep your money up.